This is my YouTube channel. Many of you are subscribed, many of you want to learn, and here is the material. You can go there and learn. This is my book that many of you are asking. You can purchase it now for a short period of time. I'm offering my online courses as well for free at no charge, but I suggest you to start with the book. So this is a site you can go and purchase the book and get the free access to the material that I have online for you guys. And these are the modules that I'm covering in my course. It covers basically everything. It started from zero to wherever you want to go. It shows you and teaches you the fundamental of real estate investment, pitfalls, the things you have to watch, even finding your team, how you can find your team and qualify them, your lawyer, your real estate agent, even your home inspector, mortgage broker, etc. And there are a library of resources. You can go there and grab things that you need, joint venture documents, etc. Archives is there answering some of the question, FAQ, and that is very fundamental. All right, housing market. Can everybody hear me now? All right, so if there is any issue, let me know. Housing market, covering everything's happening in Toronto, prices up and down, what direction the market is going. Let's take a look at it. This is Toronto real estate market it covers actually by the month of May. Now, this is the transactions happening in Toronto. See the number of transactions went up so high, now it's slowly coming down. And one of the reasons for that here is the market, we're getting a lot of inventory now. Here is the listing ratio. That's very interesting. Whatever comes to the market, does it sell or not? Beginning of the year, it was almost anything comes to the market would go very fast. Now you see it's coming down slowly. This is one of the indication of the market is diluting, or put it this way, we get more inventory into the market. And here is the price of what's happening right now, the average price. So many people said the market would react and the price would drop to much lower than where we are. Well, actually, if you look at month of May, it went a little bit higher. We can trust the graphics, we can trust the information and the data, but the news out there, speculations, if you don't have a fundamental data and information, I wouldn't go that direction. Now, this is another infographic for what's happening in terms of transaction. This is clearly shows that right now, compared to last year, we have more transaction happen. And as we see, the market was crazy. Now, compared to last month, we have less. And that's why we said market is slow, got slower. Now, this is the price compared to last year, May 20 to May 21. The number of transaction went, the price went up 28.4%. And this is for single homes. It's not about the condominium. And compared to last month, the price continued going up, but not much. Now, let me take you back to the other graph. Okay, and here you see a little bit higher on the month of May than April. All right. Now, in the news, in global mirrors today, I was reading says real estate prices expect to sharply increase this year. That's done by RBC. Say policy change have done little to cool market. Okay, what the data is showing us is a little bit different. The price increase happened already. Now, I'm not sure if you're referring to what is ahead of us, like for the next 6 months, but for sure the price would continue going up, but not sharply. As we saw 1.1 compared to last month, it would go up, but not as crazy as we saw in the past. Now, I find this site, I suggest you to write it down, is wowa.ca, wowa.ca. This is a very interesting site, and this is what I pull out from it. It's one of the page. That's a good guideline if you want to do something. The red and the dark red shows expensive neighborhoods, and the blue or light blue shows more reasonable price. Now, guys, remember, you're not there to jump into the area that mentioned light blue, let's say Brampton. It doesn't matter. It doesn't mean because it's light blue, you should go there and close your eyes and buy anything. You still have to do your due diligence, and that's very crucial. Okay, pre-construction condos, a double-edged sword. Why I call it double-edged sword. Okay, let's start. What is a pre-construction condominium? Just for those of you who are not familiar with what's happening there, is pre-construction condominium is the builder is selling a project, let's say condominium building, and you are going to take over either a few months from here, or a year, 2 years, sometimes 4 years down the road. So this is what we call pre-construction condominium. Of course, we have pre-construction properties as well, homes. Why does it look attractive to many investors? It is because it's easiest step. Most of these days, you don't need even go to the sales office. You can do everything online. You can look at the floor plan, look at the price, look at their policies and condition, agreement, everything. And you can just fill up the form online, the worksheet, and send it to the builder. And the money even can be wired down to the builder. So it's very easy to step in compared to buying a property, and then you have to go take a look at the house, look at the neighbors, etc. Now, is it promising of profit? We've seen that a lot in the past. You used to buy a property, and when you were flipping it 3 years, 4 years down the road, you were making money. So the knowledge, the notion is still there. People are still coming from the same thoughts. What I noticed for some of the builders, mostly properties, mostly single homes, they are future price their project, their condo or their house, and so you have to be careful. It's easy to handle. You think that you're going to buy pre-construct, you buy a condominium. It's easy to handle it. You don't need to take care of the garage, the basement, nothing. It's just a condominium as a unit. And why it's attractive to many investors. The payment is scheduled payment, and very, very often, mostly these days, it is very easy to pay. You don't need to pay 20% down in one shot. Now, here's some of the terms and payment plans I want to go over with you, just to get yourself familiar with what's happening in the market. See, as the market went through a little bit up and down, the builders with ton of inventory could not really sell their units. So they start, instead of pushing on the price and reducing their price, what they did, they start giving you more incentive. And that's what we see here. So deposit structure, for instance, on this project, you pay only 15% until the occupancy, $5,000 on the signing, and the rest of it within 30 days. Then you're going to see 2.5 90 days, 2.5 180. Sometimes even you can stretch it more if you directly talk to the builder, and depends how desperate they are as well. Now on the bottom here, it's a $10,000 off from the parking. These days, some of them are giving away their parking just to get you in there. $10,000 assignment fee that we're going to cover that subject. Lease on occupancy, which is very important to have it. Okay. Terms, again, another terms example for you. Talking about maintenance fee, it's important for you to know what is it and what does it cover. If you want to buy a pre-construction condo, parking available, how much, and for what kind of suites it's applies. Sometimes they don't give free parking to 1-bedroom condos. So you have to ask them, is it for 1-bedroom condo? Sometimes it covers, doesn't matter what kind of condo unit you have. If it's 1 bedroom, 2 bedrooms, some builders are not covering, they sell it to you. Same thing for the locker, and locker and parking combo here in this case is $27,500. Remember also, when you take over, the builders trying to be creative by charging you more in different ways rather than charge you a big number and make you scared. So they said, okay, there is 0.5 for maintenance fee per square feet. Also, there is $25 for maintenance for the locker and $25 for the parking. So these are additional fee that they are going to put on the project, on the package. Typically, some of the builders are, any floor is higher, they charge you premium. Some, it used to be 1,000, now apparently it's 2,000 now. Occupancy, one thing I tell you ahead of time with occupancy, if you are trying to buy a pre-construction condo for investment, try to be as far as it's possible. Just, it helps you to go over the up and down of the market. If you buy something today and you want to take over tomorrow, you would not have the privilege of market growth. And that, we get to that as well, because you have to make sure you buy your condo where the market is going upward. So within, let's say, 3 years down the road, you know the price of your condo is much higher. So it's very tricky. Next one here is only 7.5 in the first year, and that's another payment plan, which is, looks great. 2.5, 180 days, 2.5, 370, now goes 2.5, 600 days. So these are the incentives they give you. Another term condition example, this is the appliance package they give you. They try to take you in there. Most of the time you will get your fridge, stove, dishwasher, and hood fan anyway, so they brought it up here. Assignment provision, that's very important, and we're going to talk about it. And this, in this case, the builder offer you $5,000 plus HST. Some of the other builders, they give it away for free. Now, assignments. Assignment is something that basically allow you to flip your property before the closing date. All right. Now, let's say you buy your property today with assignment right, and then you are going to take over it in 4 years from now. So from now to 4 years, the builders gives you right to assign your condo unit to someone else, as long as they are qualified. So one of the things here you have to be careful, the builder's terms and condition. The conditions and terms there given by the builder are very much in details. I've seen cases the builder reject because all we asked them, is there an assignment right? And they said yes, $5,000, $1,000, or free. Most of the cases, we don't read the conditions and terms that the builders put in there for us. So when we find someone, the lawyers start reading the terms and conditions for the assignment and realize, whoops, you cannot really assign it to someone because of this reason and that reason that you didn't read when you were purchasing the property. And I've seen that. Another reason, builders and condo market. If for any reason the condo market crashes, the builder doesn't have any buyer, so they tend to not allow you to escape away from your contract to an assignment. They just stay tough, and they try, all they do is to make sure you're not running away from your contract. Advertising, be careful. Most of the builders, they do not allow you to advertise your unit for assignment because it becomes competitors. If they have more condos to sell, more unit to sell, and then you also want to sell for a lower price, then here's a direct competitors with the builder. So they, most of the time I've seen they don't allow you to put it on MLS. You can locally find your assignee, but you cannot advertise anywhere. If they see the advertisement done, if they see you on MLS, they have the right to take the unit back from you. Fees, there are some fee that, as I said, could be zero, could all depends. Could be 5,000, 10,000, I even seen $15,000. They try to make it harder for you to flip it. Time and growth and flipping, and you have to be careful. I've seen some of the investors, they buy 2, 3, 4, 5 condos, wishing that they can assign it with profit. and for some reason the market doesn't grow, goes a different direction, something happened, they cannot flip it on time. So really, that's what I said is a double-edged sword, because how do you know in 3 months, a year, 2 years, when you want to assign it, the market is in your favor? So you're taking a gamble here, a risk here. So you really have to be careful. So I personally do not suggest assignment as a strategy to flip, to invest with a wish that you can buy 2, 3, 5 condos, and that's your strategy to assign it later on. It's very, very risky business you are stepping in. Okay. Okay. Right to lease. We used to not have this option, but now we have, because there are a lot of investors on the market. They are trying to lease their property. Now, one thing you have to be you have to know, we have what we call occupancy, and we have something called, I call registrations. There are different names for that. The occupancy means the builders finish building the properties livable, you can move in there. But because of the high demand, the city cannot register the condominium yet. So you're not the owner, or the bank cannot give you the fund because it's not registered with the city. There is no legal description for this unit. So occupancy is the moment that the builder said, you know what, this unit is livable, go live there and pay me the fee of occupancy. Now, if you don't have the right to lease the unit, then it could be the occupancy and registration timing could be either could be 1 week, or sometimes could be up to 6 months. So can you afford to have your property, your unit, your condo empty for 5, 6 months? So that's becomes very, very important. If you're investors thinking of renting the place, make sure you have the occupancy rate. Levy cap is in the past we never had, well, we didn't have levy cap as much as we have these days. Levy cap means the city's development will going to cost something, and the city is going to push the cost of levy onto the builder. So let's say in downtown Toronto, they dig the ground, they notice that they have to put 2, 3 different lines of water, whatever they need to do, and the city needs to supply more. Therefore, the city is going to impose $300,000, $500,000 more to the builder. So builders can easily come back and say, listen, there are 500 units here, all of you have to share this $50,000. So, and did happen in the past. So what happened after is we call levy cap. If you go to the builder said, okay, I guarantee that your levy cap, if it goes up, it will not go more than 10,000 or more than 5,000, whatever is in there. So it's very important for you to have it, just to guard yourself. Consider these factors. Who is buying this unit? Is it investors or owners? So this is one thing if you want to buy a condominium unit in, let's say, downtown Toronto, where there are a lot of condos. Why is it important? Because if you step into a building that is 80% by investors, what's happened on the occupancy, on the registration date, they try to flip it, and that's their strategy. So you're going to see out of, let's say, 300 units, 200 of them are on the market for sale, and there is a fight for getting the first buyer to buy your unit. So they cannot, all of them, they cannot sell the units. So let's say out of that 200, maybe 10 goes, the rest they have to rent it. So imagine what's happened to the building of 300, that 190 are rental. So the tenant, they don't really care about the building. They don't treat it well as an owner. So you have to be careful to buy your investment unit into a building that is well balanced. So If the tenants start damaging the building, that would reflect into your maintenance fee. The maintenance fee goes crazy because they have to repair whatever the tenant they did. So it's a ripple effect, and it would get to you, it would get to your pocket. Flip on occupancy warning. So this has much to do with the builder's permission for you to flip it, or has to do with tax. I think here we're referring to flipping on the registration date. So you have to be careful. You have to talk to your lawyer about this one. If you're flipping your property the same day that you buy it, then I think it's taxable income for you. Geoeconomics of the neighborhood. Today I came across a building. I'm not telling you the builder, but it is done in not the greatest neighborhood in Toronto. And I have few calls from my clients asking my opinion. You have to be careful why you're buying the property. If you're there to see growth happen, just make sure the neighborhood is supporting the growth. If it's a nice place, luxury place, it's appealing to many good tenants to come, then it's very important to drive by the neighborhood, see what kind of tenants in future you will have. And that's very crucial. So, and that's create good value for your property. So you're going to put your step one after another on the right path. Know your builder. Some of the builders, they've never done any big buildings. They're expert in single family homes. These days, I see many of them are teaming up with a good builder. So it's important for you to know who is the builder, how many homes they built, where they built it. You may want even to drive by, take a look at it, and make sure they have some history of building and how to handle. That boils down to contractors they're working with and the closing date. Is it going to be delayed after delayed because the contractors they're working with is not the greatest? Longer closing, that would kind of help you to make sure the whole economy and the housing market went through the up and down and hiccups and covers all the downfall there. For instance, if you get a pre-construction condo today that will close in 3 months, and let's say today something happened to interest rate and no one can really buy anything, and that's hold on the market. So, and I've seen that almost 15 years ago. It was a builder that built properties, the market crashed. Many so-called investors tried to run away from the agreement that he had with the builder, and they didn't want to pay the rest of it and take over. So they had a lot of lawsuits with the builders and the purchaser, because purchasers didn't see any value in that property. They could go and buy cheaper condos than buying this one, but they gave their commitment. So there were many, many lawsuits back there, and that was in Mississauga. Parking fees, locker fees, and more. So as I said, when you sign the agreement to purchase a condo, go through all the fine writing and check the parking fees, locker fees, any other fee that they attach to the agreement. That's very important. Who pays the HST? That goes back to one of the subjects we covered here. Technically, if you are buying today to flip tomorrow, that is an investment, and as far as I know, is a taxable investment, taxable income. You have to check with your lawyer, however, for that one. 10 days cooling off period. What 10 days cooling period is typically is whenever you sign a contract, many builders, still there are many builders, some of the builders, they don't do that anymore. They give you 10 days for you to grab the contract, give it to your lawyers, for the lawyer to read it and make sure everything is okay with that. So some of the builders, what they do, they provide you with the agreement, blank agreement with all their terms and conditions. They put it online for you. They provide you the agreement. They said, go give it to your lawyer to read it. Once everybody's happy, then come back and put a firm offer. So we want your check and we're going to cash your check. So some of the builders these days, they are not going with 10 days cooling period. It's always good to have it. Delay, technically, builders, they can delay up to 2 times. And if you are calculating, you are counting on the closing date, just consider they have the right to delay your project. Closing date and interim occupancy. This is what I'm referring to, and that can be different. If they said January 2022, you're going to take over, usually a month and a half before, you're going to get a letter that said, listen, it was COVID, we couldn't find the contractors coming, so you're going to have 2 months, 3 months, whatever, of delay. And as far as I know, they can do that 2 times in Ontario. What is PDI? PDI, I always recommend you to do that. PDI means pre-delivery inspection. So on the occupancy day, when you go there to get the key of your unit, sometimes with an inspector, you walk through your unit and you just check mark the area that are damaged or needs to be fixed. Could be the faucet, could be dented wall, could be broken windows, could be anything, but that's very important. You paid for it. Anyone has any question for me? So what I like also to share with you here is to where to buy. We've seen City of Toronto, because of the huge inventory they have for rental market. The market went through a little bit of upside down, up and down in the market. Therefore, it hit the rental market. So it's important to know where you're buying. If you buy, don't just go with the price of the unit. If you're after growth, do your due diligence. Make sure the other properties, the other condos in that neighborhood for the last 2-3 years, the growth happened to that. Always look for a reason why a property would grow in value. If you don't see any reason, if you see all of a sudden a condo coming up in Valent and is not close to any college or any, you don't have any reason for the growth, simply because the price is very, very low, it doesn't mean you should go buy it. Always, if you're looking for growth, make sure your unit, your condominium is where it's supposed to be. For instance, close to subway, close to major highways, close to shopping centers such as Sherwood Garden. So these are the reasons that you have to look for the neighborhood, the area. So there's always this thought that because the building placed in certain area, is it worth it or not? As I said, look for the proper location. What counts also in the condominium is most of the time is the viewing of the property. So higher it is, more value it has. One of the selling feature of your unit is the view. If the view is breathtaking, then you're in the right direction. Or I've seen unit, you open the curtain and you see, literally you see the wall of the next building that is blocking you. So don't buy something that you cannot sell. If you step into a condo and you say, wow, it's beautiful, that is the feature, selling feature of your condo in the future. But talking with the builders and pre-construction, these are the things that you have to be careful. And if you have any question, you can always give me a call. My number is on the screen, 647-407-4049. And I wish you all the best. Thank you.